this is John again, options trading pilot, December 12th, about 9 o'clock. Futures markets have been open for about 3 hours now. Volume is very light. We have it's a triple witching week this week. It tends to lean a little bit bullish, I think. But the volume tonight is fairly low. Again, options trading pilot. What we do is we have two people, we trade, we post our trades in almost real time. You can follow us and learn from us we post out on Discord. We have the site, Options Trading Pilot, and various subscriptions. We have a stock trading that you can follow, options trading, and then premium, which is options, futures, cryptos, and other trade ideas. Again, everything you do is at your own risk. What we do here is really just for the entertainment value. So, but we have been trading for lots of years and decades. And so we like it, and I think we're pretty good at it. So let's take a look at a few things tonight. Like I said, it's fairly thin, triple witching. You know, we're into another almost all-time highs in the market. I don't know what's going to hurt the market here. We've had bad inflation news, bad earnings, another variant of COVID. Nothing seems to really keep this market down. So I'm not really sure what it's going to take. Maybe if inflation gets contained too dramatically and the government does something too dramatically that the markets don't like, maybe that's the excuse to see the markets go down some. So we'll see. Just looking around here, we have Bitcoin was getting close to 50,000 again. Just bouncing. You can see where we've been over the last little while today. So we'll see how Bitcoin goes. Oil is up again. Again, I'm long oil. I like to be long oil. I'm long commodities. We'll look at some of those ETFs and some of those trading vehicles. These tend to be a little more volatile, but some of the areas I like. What's very interesting is VIX. VIX is the fear factor in the market, and that has continued to go down for really since Thanksgiving. It has come way off from, let's say, almost 30, and now we're down at 20. The 25 range, this range we're in is actually a really nice trading range. Now that we're at 20, it's getting a little low again, so we actually need a little more volatility. But you don't know, maybe we only have a couple more weeks of this year. We might pin south of 20 for a VIX number for the year-end number. So we'll see. Premium sellers, like mostly what we do, are we really prefer volatility VIX, especially to be 25 to 30. So again, we're not, if we start selling premium now at 20, we're just not getting paid as much as we would if we could get a little bit more risk in the markets. So we have a few earnings next week. Earnings season seems like we're almost ready for the next one, but we still have a few more. JetBlue is, I believe JetBlue is next week. Let's take a look. Oh no, I thought JetBlue was next week. I guess JetBlue is not. Okay, so FedEx is. So FedEx is on the list for next week. The IV rank, there doesn't seem to be too much volatility crush happening. It does have an IV rank of 52, so it's above 20. So it might be something that we could play somewhat directionally. You know, the bid-ask spread is not too bad at this point. If I was going to be bullish on it here, yeah, that's not bad. A 1-to-4 ratio for a 26 delta Bull put spread on FedEx might be something I'm going to look at. Let's look at Lennar. Again, not much vol crush here. IV rank is pretty good. We'll see how this looks. This could be an interesting, maybe an iron condor in that. DRI. Restaurants, December 17th. I'll look at this later on in the week. Let's see. Yeah, that might be a good iron condor, or maybe a straddle of some sort. I would probably be going out around probably 1.5 standard deviations out to maybe the 6 or maybe 8 delta on both sides. Something around there gives me, yeah. So what I might be doing next week, I'll look at DRI, selling the one, this is a January 22nd or 21st, the 120 put, 8 delta, which is, you can see here, this is about 1.5 times the expected move. Pick up $1 there, and almost 1.5 times the expected move on the top side with an 8 delta. Going to pay me $1.62, one contract, $162. The probability of profit is 87%. So that looks like a very good setup. I'll look at that closer to the a day before. So I'll look on that on the 16th. So that's earnings. Last week, a really fun week with the Aussie dollar. Able to scalp that several times. You can see Aussie dollar is a really fun market to trade. There's quite a bit of volatility that happens in there. I'm long 6A, the Australian dollar, so I'm continuing with that. A lot of good back and forth. Looking here at SPRI. SPRI is a precious metals. It's gold, silver, and platinum together. I have been bullish on, see if I can get a little better time zone in here. So I've been bullish on precious metals. That trade really has not worked out that well. IV rank now is getting lower. So I'm continued to be bullish on precious metals, but those trades have not, I mean, it's worked out okay, but it's not worked out like oil has, and definitely hasn't worked out like some of the commodities. Something I've been watching quite a bit and playing this as well, this 2-year yield, this product is, if this product goes up, this is the yield going up and the product going down. So the 2-year treasury bill going down. I've been long the 2-year. It's bonds have been in a real tight trading range. There's not much money to be made in bonds, it seems, right now, except for selling premium on both sides. So we've been doing quite a bit of that. A lot of movement in the 2 years. The 2-year yield, a lot of ways I look at this, when the 2-year yield goes up, the banks are sitting on so much cash, it goes right to their bottom line. So you get another 50 basis points in, or 20 basis points in a yield, in a short-term yield. They're sitting on a bunch of cash. It's just right to their bottom line. Of course, they lend long, and so we really haven't seen much as the 2-year has been ripping higher. The 30-year has not, and we really need to. I've been trying to get those type of trades to work out too. Some of the things I've been looking at, DBC, I continue to like that. This is the commodity index. It had a little hiccup here, but still nice long-term trend. This was just a confusing part here, but really This is commodities. This is corn, wheat, in quite a nice basket. PDBC is also another commodity fund. I believe this was a dividend here. I don't know why this hasn't adjusted, but been looking at that. Silver's up a little. We already talked about that. Gold, inflation, not seeing a lot of gold, and you can even see volatility's dropped way off from about 60 down to about 17 now. So another one, agricultural, DBA. Again, I think this was just a little consolidation here. And really, we're not, this looks more dramatic than it is. You know, we're talking around 20.12, coming down to 19.5, closing around 1972. So I still am feeling long about that. This is a looking at soybeans and corn and wheat. These are things we trade. Just looking at copper, I wanted to take a look at this. Kind of not going anywhere, kind of range bound. TLT, this is a great product when interest rates are, I should say when this is more of a 20-year. So really, if you think interest rates are going up or down, this is a nice product that we traded quite a bit, and long and short. And then again, this is the VIX. So you can see this was the, I could have expanded these a little bit better, but you can see how much volatility expanded right around Thanksgiving and after Thanksgiving, and that's really fallen off the cliff since then. So, but let's take a look at where we are. This is regional banks. Again, interest rates, short or long term, go up. I think these really help the regional banks out quite a bit. Our mid caps are sitting right at support. Looking at transportation as well. Transportation, our support's around 16,000, so we're above that. Right now with the Dow, we have a 1,300 point cushion off of support. So really not seeing much of any kind of problems right now in the markets, and it worries me a little bit. I'm thinking that we should have a little more volatility than we do right now. I don't like to see complacent markets at all-time highs. So we'll see if we get any two-sided action this week. One other stock that I have on my list that I want to look at for next week is Novax in VAX. And looking at a very wide iron condor out to January, around the 80 to 400 range. So that would be 80 would be around here at a probably even a 4 delta, and the 400 range, if I have my notes right, would be about a 7 delta. Interesting trade to me. I'm not saying you should do it at all. This is just one of the things I'm looking at. So Novax at the, really one standard deviation out, outside of the expected move, 4 delta. Let's see, and really no real much skew here. 7 delta. Again, that's going to collect $4.25 per contract, so $425 out to January. We have 40 days left, 52 IV rank, with a 62 point move, expected move, so way outside that range. This is a probability of 89, POP, probability of profit of 89%. So those are some of the trades I'm looking at this week. Guillermo, I'm sure will have a little more analytical things to look at and some neat charts.